Welcome! In today's video, we're diving into the step-by-step process of preparing financial statements. Before we start, subscribe to our channel not to miss our new videos.
The starting point for preparing financial statements is the adjusted trial balance. This includes all account balances, after adjustments for accrued expenses, unearned revenues, and other necessary changes. It is essential that debits and credits in the adjusted trial balance are equal. Our first financial statement to prepare is the income statement. This document summarizes revenues and expenses over a particular period. It highlights whether the business made a profit or incurred a loss. The income statement starts with revenue, which is taken from adjusted trial balance. Further, we continue with all types of expenses, which are also taken from adjusted trial balance. The amounts are put as negative, since these are opposite to revenue. Subtract total expenses from service revenue to calculate net income. This is a vital metric that indicates the financial performance of the business. Understanding net income is important because it reflects how much profit the business retains after covering all its operating expenses. Next, we move on to the statement of retained earnings. This report shows how much profit is reinvested in the business after accounting for dividends paid out to shareholders. To calculate retained earnings, start with the opening balance, which will be coming from last year retained earnings. And then add net income, which is taken from the income statement. Then, subtract dividends, the amount of which is taken from the given adjusted trial balance. This gives you the closing retained earnings, which is essential for determining the company's equity. Closing balance of retained earnings will be included into the balance sheet when equity part of it will be prepared. This will be covered further in this video. Next, we prepare the balance sheet. It's a snapshot of the company's financial position at a specific point in time, showing what the business owns and owes. It consists of assets, liabilities, and equity. We start from current assets and put all relevant data from the adjusted trial balance. Total value of current assets will be the total amount of separate captions presented on the balance sheet. Further, we move to long-term assets. From the adjusted trial balance, we see equipment, which is included into long-term assets, and accumulated depreciation, which is contrary account to the equipment. Therefore, it is shown as negative on the balance sheet, under long-term assets. Cost of equipment, minus accumulated depreciation, will give us total net value of the long-term assets, which on this balance sheet is only property, plant, and equipment. There are no other long-term assets captions. Total assets on the balance sheet are equal to the sum of current and long-term assets. Further, we continue with the liabilities part. On the liabilities side, we list all obligations. These are also divided into current and long-term liabilities, depending on when they need to be paid off. From adjusted trial balance, we take notes payable, accounts payable, and interest payable. All these items represent current liabilities. Total value of current liabilities will be the sum of the value of separate items listed. Since there are no long-term liabilities data, we continue with the equity part. Equity represents the owner's share in the company. This includes common stock, retained earnings, and additional paid-in capital, if any. Equity is what remains after all liabilities are subtracted from assets. From the adjusted trial balance, we take relevant data, which is common stock, and retained earnings. Closing balance comes from the statement of retained earnings, which was prepared earlier. We put these items under equity part in the balance sheet. Sum of these items will give us total value of stockholders' equity. Total value of liabilities, which in the presented balance sheet includes only current liabilities and equity, will be presented on the balance sheet as total sum of liabilities and stockholders' equity. The balance sheet relies on the fundamental accounting equation, assets equals liabilities plus equity. This equation must always balance, ensuring that monetary items are accounted for correctly. This is the check, whether balance sheet was correctly prepared, and all data from the adjusted trial balance was correctly included into and presented on the balance sheet. Here you can see all three financial statements, which were prepared from the data given in the adjusted trial balance.
Thank you for watching. Subscribe to our channel not to miss new videos.
Let us know what kind of videos you like more: practical problems or theory explanation. Please leave your comment below the video.